After a short decline below the mark of $100 per barrel, oil rebounded and jumped back to $105 per barrel. The reason behind this was the decision of the Indian Oil Corporation to exclude high-sulphur crude grades from the latest tender. This does not mean that the tender is cancelled. It just means that India wants to buy crude of a higher quality. In other words, the demand for Brent is rising as it's the only grade that meets all recent requirements. Under the issue with the Indian tender is the settled, oil is likely to keep moving higher, so it may well reach $110 a barrel in the very near term. As we can see on the chart, the local low in the area of 97.00, 97.60 served as a strong obstacle for bears, and this resulted in a rebound so that the asset went up by almost 8%. At the moment, the quote is holding near the level of $105.50 per barrel, with the prospect of a correction. Consolidation above the 106 level will open the way towards the area of 110. An alternative scenario will be possible if the price gets stuck between the current levels for a long time. This can indicate the end of the corrective movement. India's decision to exclude high-sulphur crude grades from its latest tender has also affected the ruble. The thing is that Russian Urals grade is of lower quality compared to the Middle East grades as it contains high sulfur levels. This leaves Russian oil companies without new contracts from India, at least for now. However, the decline of the ruble is observed only in the interbank market. Right after the end of the session, the ruble was trading above the level of 80 against the US dollar. The foreign exchange market is showing a different dynamic as the US dollar is slowly but gradually rising against the ruble. It seems that this trend will prevail in the near future, at least because the ruble is largely overbought and is waiting for a local correction. The dollar-ruble pair is currently going through a corrective phase, but relative to the opening of this week, the quote has hardly moved. This is a clear sign that market participants are being cautious, which can eventually lead to unexpected price movements. A resumption of tensions between Russia and the West has pushed gold out of the flat channel, where it has been trapped for less than a month. This does not seem to be a false breakout, as gold made a rapid jump to $1,970 per troy ounce. Such signal of a trend reversal has appeared for the first time in 3 weeks, and the price has not yet settled above the level of 1,975 on the 4 chart. But bulls are determined to break out of the current cycle, so traders continue to monitor the levels for the buy signal, and if it's confirmed, the price may easily head towards the area of $2,010 and even $2,050 per troy ounce. Otherwise, the precious metal will trade flat near the upper boundary of the channel. After that, it may pull back and repeat the previous trajectory. Still, gold is expected to rise further. Recently, the European Union and the United States announced new sanctions against Russia. They are going to be much tougher than the previous ones. Notably, the latest package of sanctions introduced by the EU already included a ban on energy imports. Stricter sanctions devoted to gas and oil may trigger the worst energy crisis ever, which is why many investors seek a safe haven in such assets as gold. The fact that the gold rally started together with the recent events proves this assumption. In particular, gold strengthened when the European Union announced a ban on coal imports from Russia. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.